Welcome to the Commercial Real Estate Podcast powered by First National. I'm Aaron. He's Adam. We're in the thick of it, recording at the Canadian Apartment Investment Conference.
Surrounded on all sides by apartment investors,
busy.
developers.
There's a lot of people wandering around, all apartment focused. We've said it's like if the Super Bowl happened on Christmas for us, for First National. And it's probably the same for our guest today, Riz Dhanji, who's the president of RAD Marketing. Riz, thanks for joining us.
Thank you so much for having me.
So Riz, genuinely unsure of exactly what it is that your business does. So let's dive right into it. How did you end up in your corporation? Maybe let's talk about your career leading up to RAD Marketing.
Yeah, so I started my career at a very young age, and I won't tell you my age now, but it's in the early 20s. And I started doing development sales for large developers out in Vancouver. So I'm originally from Vancouver. And then what I decided is, you know what, I needed to really do something different. That what I saw was Canada was a lot of Asian community that was buying real estate in Vancouver, Toronto, so on and so forth. So I ended up, after I graduated from UBC, I went to mainland China and I learned Mandarin. And after that, I decided to go work for a similar company that I had in Hong Kong. So I spent 3 to 4 years of my career working in Hong Kong, doing some of the most amazing projects from Vancouver. So I would bring Vancouver projects, Toronto projects out to Hong Kong and sell it pre-1997, right, which was the handover time. And so I was just selling condos like it was no tomorrow, flying around the world, doing all these projects and so on and so forth. Then 1997 came, market crashed. I decided, okay, I'm going to go back to Vancouver. Vancouver was tied to the Hong Kong market, couldn't sell. And then I moved out to Toronto and started working for developers here. And so I started back from nothing, coming from where I was. And I started working from entry-level jobs, a marketing coordinator to sales director. And in 1 year, I was the vice president of sales. And one thing about myself is that there's a very few people that really understand development, sales, and marketing for condo projects and low-rise projects, like I would say that are in the market around the world. And so I really honed my craft on understanding the nuances of marketing and selling condo projects for developers. So I understand everything from pro formas to marketing to I was literally doing everything. And so that was 15 years of my career working for developers. And then afterwards, I was hiring these sales companies to do my sales and marketing. I didn't think they were great enough. So I decided to do it on my own for developers. I said, let me hire the team. We started doing really well. And then I looked out in the marketplace and saw, yeah, we're building a lot of cookie cutter condos. And yeah, but we're not doing some great marketing and sales. The same methodologies that we've seen in sales and marketing for the past 10 to 20 years are still today. And I said, how do we break that mold? How do we do great marketing, great strategy, great design, architecture, and blend that into one? And so about 8 years ago, I decided, I'm going to leave the development world and start my own company that does sales and marketing for some important projects around the city. And that was RAD Marketing. That was a start. And so since then, we've been doing some of the most important projects in the GTA. So just to give you an example, my first deal was taking over the old Trump Hotel. So the developers there had bought it out. There was about 70 to 80 units that were remaining there. We wanted to rebrand it to the St. Regis from the Trump. It has stigma attached to it. We had to redo all the units, the 70 units that we had. We had to reposition it, redo the real estate, rebrand it. And so we came up with the event ideas, the marketing, and the sales strategy, and we sold out the rest of the building in 1 year at well above their pro forma numbers. I did that also for the Shangri-La Hotel and Residences. They had stopped at about 100 sales. We took it from there and we blew out the 400 units that were remaining at record prices. So I'm really good at the condo hotel kind of market. And then our big break came when King Toronto with Allied and Westbank was on King Street West. They went around the world to look at some of the top sales and development sales and marketing companies, big brands. I ended up coming up, had a small team of like 3 or 4 of us. And I said, I can do this better than anyone else. And we took this project in 2018, which is one of the most important real estate developments that will be in the history of Canada. 4 mountaintops rising above the heritage building.
It's beautiful, beautiful.
It's beautiful. You
place.
can probably see that's coming out. It's a combination of Moshe Safdie's Habitat 67 with the Maison de Verre in Paris. And we sold that at $1,800 a foot when the market in King West was $800 a foot. And now the project is 93% sold. And then our reputation just started getting better. And so we did Jeannie Gang's project with Slate Asset Management at Yonge and Delisle. And so we did the One Delisle condos. And that project was a huge success in 2021. And so we just parlayed into low rise and now into the rental space, where we're taking that expertise that you see in our condo side and bringing that into the rental space on leasing, marketing strategies, and advisory work.
What are people getting wrong in the leasing? What's the low-hanging fruit, I guess, when you came into the apartment space and started looking at the way the leasing was being done there? Coming from a more sophisticated sales process, what were your first thoughts?
Yeah, my first thought is not very sophisticated.
Yeah.
You know, like traditionally leasing's been done by the property manager that's on site, or they hire a person from Holt Renfrew who was in the perfume department to come in and do a service kind of job. The sales office was terrible. You'd make an appointment to try and go see the sales office. No one would show up. I mean, it was just like, it's the most bizarre thing because like every single person is put in through a CRM. All my sales reps have a phone call every single day. You have to meet targets, so on and so forth. That was never done in the leasing side.
And
so,
part of that wasn't just because they were spoiled. Like it was easy to lease up. Like I mean, there were years and years there where you didn't have to do anything. Right? Like you literally just put a sign up and you're sold 95% or whatever the target was within days, right? And that went on for years.
Correct.
Yeah.
Correct. And that's why change that? And then all of a sudden now we see a lot more supply that's coming out, specifically in neighborhoods where you're competing against other purpose-built developers, which we never really saw before. And so now it's like, what are you doing to differentiate yourself? And I think, Adam, you and I talked about this, is that if we can reduce your lease-up period, you know, by 6 months, 8 months, if we can help you get the kind of revenue that you're looking for, I mean, on a pro forma, that looks unbelievable. And so I think now more thought is, how do we use strategy that we've used before in the leasing side, hire the top salespeople, you know, really come up with event ideas, come up with really strong marketing ideas, and those kinds of things to be able to lease up faster and better than your competition.
How important is the brand? Like how important is it? I mean, not the brand of the developer, but the brand of the condo. You know, that it's got a flashy name that you feel like
identity.
Yeah, because I feel, and I'm asking almost to be sort of a contrarian. Like, isn't it really just come down to price point? Like, I don't care if it's the Aura versus the Delta versus this, but this one's $1 million, that one's 900, so I'm going to buy the 900. Like, I'm like, tell me I'm wrong. So how does it work?
Do you mean on the condo side or the?
Yeah, let's do the condo side for now, and then we'll pivot to apartment.
The condo side, the marketing is probably one of the most important, I would say, in our business. And the reason is because you can have 5 projects in the row, all of them selling at the same price. What differentiates you from that project? And, you know, we were doing some of the tallest condos, you know, Aura, 90 stories. There's just so many units that are in there that you're competing with. You have to differentiate yourself. And the way that you differentiate yourself is the marketing side, really branding that condo. And I don't mean like crazy names, like some of the names that are in condos are like ridiculous, but I think really branding it to differentiate it from everything else and inspiring people to buy and live in your condo versus just a typical marketing plan that has no emphasis on uniqueness or creativity. And I think people gravitate towards that, and we've been successful at it.
How much do you get into the sort of demographic approach? We've had guests on, I'm sorry, the name is escaping me, where they're really focused on, you know, this is not a building for everyone. This is a building, more specifically and geared towards, you know, empty nesters and or, you know, young professionals. And so the marketing is geared towards that. The amenities are geared towards that. The design and the style of the building is geared towards that. And that, of course, then, you know, allows you to be more targeted and presumably a faster lease up period.
Yeah, and I think, you know, if you're looking at the condo side, the same thing applies, right? So you need to know your demographic and who's going to be buying that. And then you need to gear your marketing campaign, your amenities, your design, and your architecture, and everything around that. And the same thing is happening on the purpose-built rental side. You need to really know your demographic and how your marketing and all that coincides with that. And that's an important element. And it wasn't done before in purpose-built rental. It was just, let's throw out everything and let's see what's going to stick and people will come in. But now you have to be very detailed on your data and who those renters are and how you're going to be able to target them. So for instance, like we do various events for, renters that are younger in the younger demographic, they're really cool, they're hip, you've got a DJ, just different things to really explain the amenity itself. The project itself, how the amenities work and how they cater to that person. Those are the kinds of things that differentiate from the project across the street that's renting for a very similar rent that you're doing. So you really need to be different on that aspect.
What's the biggest difference between marketing for condo and marketing for purpose-built?
I think marketing for condo is very detailed in the sense that we do so many touch points and so many different things to be able to get that right prospect in to be able to buy. So we are using everything from social media to direct marketing to newspaper advertising to, you name it, events and so on and so forth. I don't think you need to do as much on the purpose of rental side. And the other challenge that you have on purpose of rental is that you don't have the condo budgets to be able to support that, right? Which is another problem that we have, right? You need to have some sort of budget that makes sense to be able to lease out your building, but it's never going to be what the condo side is.
Yeah, and the tenant, the user, buying a condo versus renting an apartment, they don't have the same significance to the individual.
Wait, you're to nudge them over the line.
Yeah, going to buy a condo, for a lot of people, that's if it's your first purchase, and it's all your life savings, it's a major life event. Renting an apartment may be interesting, maybe important to you, but if you don't like that apartment,
some people move every year, so it's no big deal,
right?
Yeah, so that's the other big the difference, right? So you don't have to put as much effort or emphasis on the marketing and the cost. On there.
Well, maybe we can separate out the two. So part of your endeavors right now is trying to move the glut of condos that exists in the Toronto market. No news here. I think we've got about 18 months supply is the idea. No new condo construction really coming on stream. So you're part of the efforts to get to that goal of 18 months, clear the inventory. So in a tough condo market, which it is right now, sales centers are not really flourishing. What are you doing to try and move some of the inventory?
So we're really using, we're going back to the fundamentals that we saw 20 years ago when I started, which is looking at the end user buyer and that catering the product more to the end user buyer. So for instance, we have a project at Bathurst and St. Clair called 4A Condos. We're releasing a new penthouse release. It's for Canderel and Kingset Capital. And these are going to be larger units between 1,400 to 2,100 square feet. The unit mix and the design of the actual floor plan has a lot of amenities, a lot of outdoor space, as well as closet space, open concept areas, huge bedrooms, like things that we never thought of over the past 20 years because we were selling to investors. So you really didn't need to think about your unit mix and your design and your floor plan and so on and so forth. So everything that we're doing now is geared toward the end user and how we're marketing to that person. And we're elevating our marketing efforts to be able to cater to that individual. It's when the person comes into the sales office, it's a white glove approach. It's a coffee, it's a long conversation. They're coming back 3 to 4 times before they buy. This is so different than what we've seen for the past 15 years, where literally people were lining up outside to buy condos. You would get a worksheet and you'd be like, listen, if you don't buy now, I have 10 people that are ready to buy that. That's not coming back anytime soon. And so you need to focus your marketing and your sales efforts on a different approach to be able to get sales.
And do you think the market's going to clear in 18 months? Obviously, you're a part of it, but do you think the condo market will clear in that time frame?
So I think there's 2 things that we have a problem with. One is currently we have a 74-month supply of units that are under construction or completing that are unsold. We are having people that are having the default rates are gone up. So before, default rates were probably around 3%. Now they're hovering between 15 to 20%.
That's enormous, yeah.
It's an enormous gap. We're talking about
So
5
their,
to 6
so their
cents.
default is in,
Like failure to close.
well, yeah, buyers walking away from the deposits.
Buyers are walking away from the deposits.
And then so you've got your clients trying to resell these units.
Correct. So you've got your existing inventory that you had already, and now you have this inventory that's coming back.
Oh. And,
Right.
and how do you price that? Because you can't you can't undersell yourself, can you?
No. So the next thing that we're doing is we're setting up a separate brokerage to help developers clear that inventory at reasonable pricing to institutional high net worth individuals that have the capacity and have the long-term hold to be able to do that.
As investors.
And it helps the developer because they get to clear their loans with the bank. Obviously protect some of their margin that they have. These were units that they already sold and probably had 25% or 20% deposits already. So they've already they've kept the deposits on there.
Yeah.
So the delta isn't that bad, but they get to move that out of their stock. And so that's the next phase of what we're working on. And I think that helps clear that inventory. I don't know if it's going to clear in 18 months. It could be a 28, 24 month thing. But yeah, that's the plan to be able to do that.
We hear about this shadow assignment industry. Do you have any visibility on that, or do you participate in that? Like, how does that? Like, if I'm a tenant now that I've got this purchase and sale, I've got this unit that I'm taking over, but I don't want to close on it. There's a lot of condo units trading hands that we don't really have a great visibility on.
Yeah. So if you want to have a visibility on the assignment market, you look at various WhatsApp groups. So there's various WhatsApp and Facebook groups that
I think Redis got conversations. Yeah.
Yeah, and they have these conversations between agents that are trying to clear inventory, and I'm on all of them. About a year ago, assignments were trading. Now what's happening is because you purchased so high, you have to give money to the assignor to actually take that unit off your books. This is the first time I've seen since the 90s that we're doing that. And so literally the assignment market is frozen unless you're willing to say, I'm giving you $100,000 to $150,000 to take that unit off my hands.
So if your deposit's $300, you're going, okay, well, I'll give you $200 and I'll save myself $100,000.
No.
If you can't close, and the deposit.
No, I'm giving you the 300.
Yeah.
And I'm giving you 100 on top of that.
Okay.
Like you're avoiding legal action, really, is what you're paying for.
Correct.
There. Yeah.
You're exactly avoiding the legal action. What is that? Does that 100,000 cover me from any legal costs that the developer is going to go after with me?
What a sour moment in an investment, though, to cut a check to somebody, and you also have to have the money to do that, right? That's
Correct.
the other thing. Is
correct. That's why we're frozen right now. Is because
Yeah.
no one has the money to be able to clear that, and no one's buying it unless the deal that they're getting.
And okay, so let's pivot. There's lots of really good news, right? We just had Benjamin Tall here.
That's bad news.
Yes.
Yeah. We just had Benjamin Tall talking about interest rates coming down, which is gonna unfreeze a whole bunch of assets that have been sitting there waiting to be sold because there's other desires just to recapitalize. That's gonna throw a bunch of money back into at least purpose-built apartments, and that we are hoping and believe that the market for apartments is going to continue to get strong or be strong. There's government pressures to, lower DCs, discount DCs. Like there's lots of value, there are lots of momentum coming from a regulatory perspective. So apartments are going to be blossoming, let's hope, in 2026.
Yeah.
How are you pivoting your business really to make sure that you're at the forefront and getting that? I'm going to pivot a different way. Apartments yields are very thin.
Yeah.
Right. And so if I was an apartment owner, making the decision to hire somebody like yourself is debatable. And so what is it that you would say to apartment owners? Say, no,
It's an
you
investment,
have to.
not an expense.
Well, let's say, how is it? Like, why would I bring you on?
Like the ROI.
Yeah, I think it's the ROI, and I think the fact that we can probably cut your leasing timeline significantly, and probably get you a higher rent than the typical purpose-built rental firm that's out there, is huge on your bottom line. So you're, like Adam says, you're making an investment for us to help you get through that situation. And that's what we're good at. We're really good at strategies to be able to, decrease your timeline for rents and also, get you the kind of numbers that you're hoping to look for in a market like this. Because I think before we were always thinking, okay, it's going to be a 12-month lease up. It's just not happening. Like I just tell every client, that's never happening right now. Some projects are taking 36 months, right? So if we can decrease that timeline for you, it's just so much more on your bottom line.
Let me tie all our worlds together. In financing, of course, CMHC insured is 99% of apartments being built with that insurance, and CMHC is mandating most often rental achievement, meaning you don't actually get to pivot from your construction interest rate, which is 5-6%, to your term rate, which is sort of 3.5-4% or lower, depending on what happens with interest rates, until you achieve your rents. And so that rent time frame has a material impact on the cost of capital that you're borrowing.
Exactly, and so I think that's where we're positioning ourselves. I don't think everyone's going to be, using our services, but we know that the larger, more institutional developers,
probably the higher end stuff.
The higher end stuff, yes, exactly. And so it's just it's a whole different approach to renting that versus, the typical condo that you see under a rental.
You're talking to longtime condo developers now about embarking on apartment programs. And it's not the perfect marriage. Obviously, visually these buildings look relatively similar. Cash flows are very different, process is very different. So when you're speaking to them about this idea, where are you seeing, resistance, where maybe there's some friction in trying to pivot into apartment after being, a 30-year condo developer?
So I think there's a couple of things. One is they have a perception of where rents should be in this market or where they are today and what they can inflate, which are unrealistic to where the market is today. Because they're still thinking that I want to get the returns that I was thinking about getting as a condo.
That's a backwards engineering number.
It's a backwards engineering number, right? And every time we do this advisory work and we come up with what the realistic number is, they're in shock. Because they believe that we should be in this should not be X dollar a foot. It should be significantly higher. So I think that's one major thing that we have to overcome. The second thing is their unit mixes are completely different than what they designed as a condo. You cannot have a bachelor unit. You can't have small 427 square foot one bedrooms. You can't have 3 bedrooms that are 720 square feet. Like, people won't rent that. You can't have inefficient floor plans. Your amenity program, no one wants a pool, right? So you have to completely change your building to design for what the rental market's looking for and what that renter is looking for. And they can't visually or think through that process. So that's a very difficult process to get over. And then the fact is they've got to put a lot more equity in to be able, and they don't get the great returns that they had in the condo side. So I think all those things are a little bit of a deterrent for them to do it. And you have to be really good managers of that asset. And they've never done that before. So I think that's the mindset change that needs to happen.
Can they afford just to not do anything, though? Because, the condo market, we assume, is gone for a couple of years, right?
Yeah. So I think the smaller players are going to be out of this, and they're going to sell their land at whatever the price is and move on. I think the larger, more dominant players in the condo side will just wait this out, and they will just they believe that the future will be condos will coming back. Benjamin Tal talked about it. There's literally no supply that's happening, and so by 2028, 2029, we're at no supply, and so people want to buy homes. Where are they going to buy it? So I believe that in the next few years we're going to come back to condos. But I think that those people will wait it out. But the periphery guys are going to be gone.
When condo guys get back into it, you'll be back into the condo game?
Yeah, we're still in the condo game. So I don't want to say that we're not in the condo game. We just see that there's an opportunity to differentiate, purpose-built rental more than what is done in the marketplace right now, outside of like a Fitzrovia or someone else. And so we can add that value to them. But we're always going to have that purpose-built rental side, and we're always going to have the condo side. So I think we will, and we're good at it. But one thing about our company is that we don't do more than 5 to 6 projects a year.
Okay.
And so I don't want to do, and there was an interesting graph that came out a few days ago with Zonda saying there's 1 million condo units that are either zoned right now or going to be zoned in the next year and ready to go. And so who is going to be able to sell and market these projects when they come to market? The industry I see on the development sales side is consolidating. So there's not as many players. There's not as many people that can do what, our company does. And so there's just going to be limited players that are out there. So it's a very interesting time to see what happens in the next few years on that side.
Before we go, can you say to our listeners, thanks for listening in Mandarin?
谢谢你好.
Perfect. Thanks so much, Riz. And thanks for sharing your insights into this. You've got a kind of interesting position, that you're already so plugged into the newer entrants into our space. Aaron and I, of course, focus on apartment. And yeah, the condo people showing up, that's new for us, but you've had a long history of them. So you're definitely well positioned to kind of help them over the hump and into our arena. Of course, we do want to thank the Canadian Apartment Investment Conference for having us here today. Real Estate Forum's put together a great show every time. Thanks First National for powering the podcast. Thanks so much to our guest Riz.
Thanks for having me.
Thanks, Riz. Appreciate it.
Guys.